say it is 210 net 60.
Okay.
What does that mean?
It means you get a 2% discount if you pay it within 10 days, but you have to pay it within.
Exactly. You get a 2% discount within 10 days. You've got to pay within 60. Okay. So Dylan, I pay within the invoice period. How much was my actual cash out of pocket?
49.
Okay, now let's do this. Let's take out, if you can, a journal or make one. This is the important piece to figure out what these journal entries look like. Okay, so when I bought that inventory, you guys, take a second, get your journal together. When I bought the inventory on credit, what did I put in my journal? I haven't paid for it yet. I bought it. I just brought it into my warehouse. What did I put in my journal? And let's just say that was May 1st.
That is merchandise inventory.
Yep.
And credit account.
Excellent. Great. Okay. So, oops, AP. Has anything happened to my P&L with this journal entry? No, I increased my assets and I increased my current liabilities. All right, all good. Now, in this example, we paid within the 10 days. So make the journal entry, please, on the 8th to pay it. I paid my invoice. And remember, credit your cash first. So move down 2 or 3 lines, indent, and credit your cash first.
This isn't them selling it.
No, this is just me paying for my inventory. Credit the cash first. Pull the existing accounts payable off the books because I'm paying it. And then you're going to have a plug number that I hope you can remember what account it goes to. So my cash, I get a 2% discount. So I'm paying 98% of it. So I wrote a check for this. How much does my AP have to come off the books at? The full $5 grand. Otherwise, there's just going to be some like little amount floating out there that doesn't mean anything. So I've got $5 grand on the debit side, 4,900 on the credit side. What is my plug credit to? Very good. Now, here's the magic question. Let's say that $5,000, what I bought was, I don't know, 56, let's see. Lance came up with boomerang. Somebody else give me something I'm selling today.
Teddy bears.
Teddy bears, that's so cute. As a new grandma, I can appreciate that. Okay. How much cost do I have in each teddy bear after this transaction is culminated? In each, because now I'm going to sell them. Really? Set up your T account. I don't think that there's $5,000 in my inventory account. How much cost basis is in each teddy bear? Okay, let's see. So here's my inventory account, right? I started with $5 grand, and then I posted $100 credit. So $4,900 is in there. Divided by 56. What does that give me? Great. Wow. So again, we've got designer teddy bears here. These are teddy bears selling at, I don't know, some designer toy store. They're made out of cashmere. Yes. Exactly. Okay, everyone clear on that? Second one, Jen, can you read what this says here? Okay. Again, just to be redundant, book the purchase. I'm going to make this a little bit more exciting here now. So I want you to do two things. I want you to, three things actually. Book the purchase on 6/1. Book the payment on 6/14. Calculate the basis. I'm buying scarves this time. And I purchased a batch of 1,900 scarves. And then book the sale of 50 of them on credit. Book the purchase of my scarves on June 1st. And there was 20 grand worth of scarves. Then I pay it. Well, yeah, we're using B here. We're working with B. And then I pay it. And then I sell some of them. $1,900. The terms were 115 and 90. Oh, great question. The scarves are going for $27.50 each. Yeah, well, yeah, yep. All right, you want to walk through this together? The basis, the cost basis, because you can't take them off your books until you know how much cost is in each of them, can you? The amount that you move from inventory to cost of goods sold You can't do that until you know how much is in each scarf. So I wrote him a check for 19,800 because I paid for it within the discount period. But you always, always, always have to pull the full AP off. And the difference is a reduction in your asset called merchandise inventory. That makes sense? So that was in the old system called the periodic system. Now with everything digitized, it just flows through your books as it does through your warehouse. So when I buy those scarves and I bring them, the truck, you know, pulls up and I unload them into my warehouse in Norman, Oklahoma, I now own them. That's an asset. It's got to go in my books. It will sit there until I do what? Sell it. And then it comes out of my current assets and goes on to my profit and loss. Tyler?
I think I may be reporting it wrong because I have an extra transaction here. At first, I put the merchandise inventory of 20,000 in my non-payable of 20,000. Also, I debited my merchandise inventory of 20,000, credited my accounts payable, and then 614 when the purchase was made and the sales started realized, I debited my accounts payable 200 and then
No.
credited my merchandise.
No, you have to, okay, so the difference between what you did and what's correct is on the date that I paid, Tyler, the very first thing you've got to go do is write your check. Okay, so drop down a couple lines, go in and write your check. Then you pull off the full amount that was in the accounts payable. And then this is your plug number, which should make sense because it's 20,000 times 1%. You with me? Andrew?
You're essentially just crediting the value of your, I don't know how to, I'll get on Tuesday. Because when you credit merchandise, you feel like you spend like $1.
No, now look at it. Look at it. Here's my inventory account. $20,000 was my original entry, $200. So what's sitting in inventory right now? $19,800. Yeah.
But not like full supplies.
It is. No, that's what's sitting there. Okay, so help me understand this. If I had bought those scarves and it had no discount, say that I had paid on the 18th of July or June, would I have gotten a discount? No. Does anybody have a problem then with the fact that there's $20,000 of scarves sitting in my inventory? No. So why is it a problem in your mind that I have $19,800 worth of scarves sitting in my warehouse?
So it's just on if you get a discount, you'll have a lower
Cost basis. Yeah, because you paid less for them, right? You paid less for them. Yeah, you've still got 1,900 scarves. Now, how much do I have as a cost basis in each scarf? $10.42. That's what each one of those cost me. Now I'm selling them for $27.50. How many journal entries do I have? 2. Yeah, well, 4 accounts, 2 journal entries. I'm selling them for $27.50. My cost basis in them is $10.42. And I sold them on credit. And let's say I did that on the 20th. I can't make the journal entry till I know this number, can I? So here's the sale. $27.50. 7.5 times 50 scarves. $1,375. And what's my second journal? What do I debit and what do I credit? What we have done right now, okay, and that is 1042 times 1042 times 50 scarves. Oh, I'm down the line, sorry. 529, 521. Now, calculate the gross profit on this transaction in dollars and in percent. Calculate the gross profit on the sale I just made, both in dollars and in percentage, please. Go ahead. That was my cost basis times the number of scarves I sold.
Oh.
Mm-hmm. And that's the whole thing. You always have to know both these numbers. What did I sell it for, and what do I have into each of them? If there's no discount, it's just the amount of the sale, right? Okay, so my gross profit is 1375 minus 521. So my gross profit was $854 on that transaction. And if I divide that by the sale price, 62.1%. What do I have to cover with that $854 and 72.1%? One more time. Everything else.
I asked how you come to
Sure. Calculator. Okay, so my gross profit was 854, right? And I divide that by the sales. So what I'm saying basically, Dylan, is 62% of, or 62 cents of every dollar of sales is available to cover everything else and my net income. And that, and if you manage a retail store, you live and die by that percentage. Remember, we were talking on Tuesday about like what happens with inflation. They still got all the same expenses they need to cover. But as the inventory costs them more, their gross margin gets squeezed. Inevitably, they are going to have to raise the price to the consumer or become more efficient in something else down the P&L, like wages or utilities or, you know, supplies or whatever. Okay. Let's keep going. We've got a lot more that we need to cover. Okay, so This was 854 divided by 1375. That's what I wrote, right? Okay. Merchandise, 75,000. I paid it within the discount period. Trevor, how much cash did you get? How much did I pay? I did. These are all assuming that they are paid within the discount period. Yep, 74,250. And this one I paid within the discount period. I probably paid $9,700, correct? Okay. Number 8. Prepare journal entries to record each of the following transactions. The company records purchases using the gross method and a perpetual inventory system. And basically they tell you that every time, but we're assuming that all the time. The periodic system really isn't used anymore. Everybody's got some digitized way of tracking their inventory. If you don't, you're in trouble. Okay, so let's, where this came from. Dylan, do you want to tell me what you did? Which one are we on here? May 1st, what did I do with that inventory? Okay, great. Now, I'll just stick with you, Dylan, on this one, if it's okay. So now I've returned the merchandise. What happens?
Debit accounts payable 1, credit merchandise.
So what he just said is absolutely correct. Do you see how everything goes through the inventory account? The returns, the discounts, everything. And that's ultimately in this T account, how we establish our cost basis. Okay, then this one gets a little trickier. On the 31st, I paid the amount due from May 1st minus the May 7th return. What do my terms tell me, Dylan? Yeah, there's no discount, right? Can you see where it would get trickier if you did have a discount with a return? Okay, so tell me what I did then on the 31st.
You debited accounts payable 700 and cash.
Great. I always start with the cash on any of my AP payments because it makes me go through the process of really understanding how much I owe them. Okay. The first thing I do is I write the check. So I go down and I make the credit. Okay, number 10. Can you guys see that? Yeah. Okay, prepare journal entries to record each of the following sales transactions. The company uses a perpetual inventory system and the gross method. Okay, Trevor, April 1st, sold merchandise for $3,000 with credit terms M30. The invoice was dated April 1st. The cost of the merchandise, so they've done that calculation for us, is $1,800. What'd you do? Okay, start with the sale. Is that the amount that it was sitting in my inventory account at, or is that the amount that I sold it for? Okay, so what's my debit to if I sold it on credit? Accounts receivable. Think about this, you guys, like you are sitting at, rose hours Oh, that's not a good analogy. That you're sitting at the Yamaha shop buying an ATV. And you're like, oh my gosh, thank you. I'm so excited for this ATV. You know, it's a used one. I'll pay you in a month. That's revenue to them. Is that what they paid for the ATV that they're selling you? No, because why would they be in business? So the first thing you have to do, you don't touch anything with inventory, you just record a sale. This should look just like the sales or the revenue entries we were making for my engineering company or my CPA company or my law firm. Debit AR, credit revenue. It was just called service revenue then. What's my second debit? And just kind of stick with me here, Trevor. So I've made my sales. Now what do I have to do with the Yamaha shop? I've got to get what off of my books? I do. I've got to get $1,800 worth of inventory off and move it to my P&L. What is that journal entry? Yep. And what's my credit? Yep. You guys, if nothing else, freaking memorize this. They look the exact same over and over and over and over. There is no creativity here. It looks just like this. What kind of account is cost of goods sold? It's an expense. What two accounts are on your P&L from this transaction? Yeah, of course, it's an expense. And that's what your income statement looks like. Sales minus COGS gives you gross profit. We're going to learn today that the sales gets a little bit more complicated because guess what? I can also give, just like I got terms on the inventory I purchased, I can give terms to my friend that just bought the ATV. I can say, you need to pay me within 30 days, but really I need the cash. I'll give you a 3% discount if you pay me in 10 days. So I can do the same thing, offer a discount to bring cash in the door. So for giggles, let's try that.
So, do you always put your cost of goods sold, is that
No, we're going to treat them as two journal entries. And just do it in the order that you would think about it, like literally physically in the store. A, I bought something, let's book the revenue. B, guy that's left sitting there minus one ATV on his floor has got to pull it off of his asset account and expense it. Matching principle. Match your expenses against the revenues they help to earn. Okay, so Tyler, stick with me here. Now we're going down the road. This transaction, my invoice, can you read this for me?
Is that 3 or?
3.
Okay, so 2%.
Yeah, I'm offering the same thing that I was offered by my vendor purchasing inventory. So I'm like, cool, you just bought this ATV. I need cash. I'll give you a 3% discount if you pay me within 10 days. And on the 9th, they pay me. You're not going to know one of the accounts, but just flip this in your mind. First, debit the cash. How much cash did I get? Second, pull the accounts receivable off the books, and I'll tell you what the plug is. So leave a blank row. So first, debit the cash for how much money I got. Second, pull the AR off the books. And third, we'll deal with the I'll tell you what the plug account is. Yeah, we're just moving down on this transaction. I didn't get 3 grand, I got 2,910. Tyler, how much do I pull the AR off the books at? Always. Same with AP, same with AR. You can't leave these little floater amounts out there. Debit or credit? So obviously I'm missing a debit for what amount, Jen? It is a new account and it is called sales discount. Sales discount has got a debit balance. And it is very good. Wow. Did you get that from the reading or did you figure that out? Oh, cool. Yeah, it's a contra revenue. It goes against the revenue account of sales. And while we're at it, there's another contra revenue account called sales returns that works just like this. I don't want this ATV. It doesn't run. Take it back. So you're just learning about 2 new accounts, sales discounts and sales return, and they are both contra revenue accounts. Yes, they will always be debit. Just like revenue is always credit. Okay, so now, where are we? Yes, great question. So I'm kind of jumping around, but not really. So what are the 3 titles that I need for an income statement or for any financial statement? Then where do I start with? Sorry, the 3-pronged title way up at the top. Go ahead. So the title of the report, name of company, and the date. And for a P&L, for a P&L, is it a point in time or is it a? I think it's for period. So funny. So there we go. It's for the period. So for month ending. Now, great. Now, what's the first part of my income statement? Revenues. And now look at what it looks like. I think Dylan was asking, where does it go? Sales, less sales discounts, less sales. Let me just write this down and then I'll try and get it so you can see it. Less sales returns gives me something called net sales. And that's the number I subtract the cost of goods sold from to get gross profit. You've got to memorize this. It's in the book. It's what the top of your income statement now looks like. It didn't exist, did it, on a it didn't exist on a service company because, sorry, I don't know, it's blurry. One more time.
I don't know where it's gonna get from.
There we go, there we go, there we go. Yay! Okay, here's the scoop. So the top of your income statement always looks like this now. You didn't have that in a service company because there was no discounts or returns. I sold you an hour of my time, you paid me for it, right? Memorize this model. And then all your other operating expenses go down here, and there's nothing new here, you guys. This is all the stuff we've had forever, right? Advertising, depreciation, blah, 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 down to wages. Right? There's nothing new here. Total operating expenses and net income. And the model that I just wrote up there is right here on page 178. That's what you absolutely 1000% need to know. When did the Zoom, what happened there?
I don't know, it's not doing it.
Yeah. All right. Okay, page 178. This is absolutely unabashedly what you need to know. Okay. All righty. So what I'd like to do, what do we got? 1147. Where am I? 194. All right, let's finish these last two. I think we were on number 10. Now the customer in the April 1st sale returned $300 of merchandise for full credit. The merchandise which had cost $180 is returned to inventory. Okay, Tyler, this is tricky. What did you do? Excellent. Excellent. Okay. He did, and this is, how much was that again? Basically, we're just reversing what I did, right? Before I had debited COGS and credited inventory. Now they come back with it and they're like, put it back in your warehouse. I'm like, oh, I got to throw it back to my assets. And my expenses aren't as high as I thought they were. And I also have to reverse the what, Tyler? The sale, exactly. So what's my credit to? Excellent. And this is that new account I just introduced. What are you debiting? Mm-hmm. So now we probably need to put in our notes the fact that when you have a sale, let's put this in our notes somewhere that we can refer to. When we make a sale, how many journal entries do we have? 2. When we have a sales return, how many journal entries do we make? 2. When you pay or when you have a sales discount, how many journal entries do we make? That's just, oh, well, there's 3 accounts, but 1 journal entry. Are you with me? Anytime, and this is how you think about it and how you remember it, anytime there is the flow of inventory in and out of your warehouse that you've sold or you're getting back, you have to make 2 journal entries. One's got to be for the inventory and one's got to be for the revenue side. Okay, next journal entry. I sold merchandise for $1,000. Credit terms 110 net 30, invoice dated April 8th. The cost of the merchandise is $700. Lance, what did you do?
So I debited, for cost, or, and then-
You didn't debit revenue. Okay, we're on the 8th. I sold merchandise for $1,000 on credit.
Oh, so,
And
no,
that merchandise
Yeah,
was
debited.
$700.
yeah, sorry, I did.
But I didn't get cash. I sold it on credit.
I have a lot of scribbled in pen here, so I'm trying to interpret it. So I'll just take it from the top.
I think you can do this off the top of your head, probably better than you can look at your scribbles. So I made a sale for $1,000, and you said I'll pay you later. And that merchandise was in your warehouse at $700.
Okay, so then I'll debit accounts receivable.
Yeah,
And I'll credit revenue.
that's right. Sales revenue. Yeah.
And then I'll make a.
For how much?
For that.
Yeah, great. So now I've gotten the sale portion of the transaction taken care of. Now what do I have to do?
Then I'll make a separate entry, which is COGS.
Yeah,
I'll debit COGS 700 and credit for second place.
that is correct. Tell me, you guys, what the gross profit was on the sale and what the gross profit ratio is. So I want the dollar and the percentage. Gross profit on this transaction that just occurred.
But how much was the cost of goods sold?
$700. So what was the gross profit? Right, 1,000 minus 700. And 300 divided by 1,000, my gross profit ratio was 30%. Do you want your gross profit ratio higher or lower? Why? It doesn't mean I'm making more money because I've still got to do what? I got to cover all my other operating expenses and hopefully some net income. But yes, what it means is that my cost of my inventory as a percentage of my sales price is lower. That gives me more to cover everything else. Okay, last one. I received payment. Let's see, who haven't I picked on for a while? Jen, I received payment for the amount due from April 1st, less the return. So first off, which account am I going to look at to determine how much they owe me? Yes, so tell me what's in there. Yes, it was. Yeah. Didn't they give me back 300? So the first thing you have to do is figure out how much do they owe me from that sale. Mm-hmm. 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 Yeah. Excellent. And now how much do they owe me? After this transaction? Nothing. And that's what you have to make sure of, is that you've cleared your AR account, right? Okay. Number 11.
I have a quick question. I know it's in the textbook that someone out there is doing this to help us, but every time they were journalizing a sale,
Yeah.
Are we supposed to put that in?
No, but unless you feel like you need, because if you've got multiple transactions, you can have different terms with different vendors, right? Okay, now, you guys, listen very carefully because we've got to get onto some new content this last 25 minutes. You've got your reading quiz this weekend. And then, so go, not now, because I want to move on to something else, but you need to go review the solutions or what you did against the solutions manual for this one. This isn't new. This is what we've already been doing. Okay, this was due for today, right? And then also, did I tell you to do 12 and 15 for today? 12, okay. And then this one. So you guys just need to go check up on that, okay? All right, so let's talk about what's new. Oh, crap. No, that's okay. All right, yeah, chapter 5 solutions manuals open. So that's good. Okay, let's take a peek at the PowerPoints. We've got some other topics that we need to discuss. So as you can imagine, we've also got to do adjusting entries and closing entries for a P&L. And the other thing we have to talk about that we started on was transportation. Okay, this is important. So if I'm in the business of buying, let's say that I'm buying gaming consoles, and I'm an electronics import business in Long Beach. One of the biggest issues on my mind on, A, how much do your consoles cost, but B, who's paying for shipping? I mean, they're coming from inland China. So they need to get shipped across China to the ports, and then they need to come across the ocean. Then they need to get unloaded onto some sort of the containers, right? Onto some sort of a truck, and then they've got to show up at my warehouse. That can be really a shit ton of money, right? So I'm pretty concerned with who's going to pay for that. Two terms can occur. FOB shipping point, FOB destination. What does this mean? Say this out loud. You remember what that FOB means? Free on board shipping point. That means the guy or the gal in inland China does what? Doesn't pay for it. And it's right there in the way you say it. Free on board shipping point. At the shipping point, it's free. So therefore, who pays for it? The buyer. Where does that freight cost go? What does it become a part of? It goes into inventory first, and then it moves into COGS when you sell it. Because all of a sudden, those gaming consoles didn't cost me 80 bucks a piece. They cost me 120 because there's 40 frickin' dollars of shipping in each console. That makes sense? So when I pay for it, when the buyer pays for the freight, it goes into inventory. So set up in your notes, please, a big T account for inventory. And just based on what you've learned, there's 4 things that can go into the cost of 1 unit. So set up a big T account. Just like this. Always put your plus and minus still to this day to help you. And we have now learned 4 different things that can go into your merchandise inventory. 2 on the debit side and 2 on the credit side. And I want you to just actually, write what they are. So one of them is the purchase price. See what I'm saying? What are the 2 things that are going to decrease that? And what's another thing we just learned that might increase that. So for those of you that are out there, or did I shut that down? What we're doing is drawing a big T account for merchandise inventory to illustrate what 4 things can go into the cost of 1 unit. And we're just going to write what they are. There's 2 on the debit side. And there's 2 on the credit side. So obviously, whatever they quoted me as the purchase price is a debit. Okay, what did we just learn from that freight slide? So if the inventory was what are the terms again? FOB shipping point. It was free in China. So I had to pay for it in Long Beach. The cost of the freight. What are the 2 things that can decrease the cost in merchandise inventory? Purchase, so let's do this one first. Purchase discount, right? I pay within the terms. Right? 210, net 45 or something, and I pay within 8 days. That's going to decrease the price per unit. And then absolutely any purchase returns. Oh crap, these aren't the consoles I ordered, or allowances. Hey, these are the consoles I ordered, but you know what? They came damaged. I'm not paying you 80 bucks a piece for them. I'll give you 18. And I take pictures of it and I send it to them. And the quality control guy in Inland China is like, yeah, okay, wow, I do have to cut the invoice down. So this is all the crap that can happen to 1 unit of inventory. It will eventually, but this all comes into that dollar amount per unit. And then, yes, that will move out of here and into COGS. Absolutely. Okay, what happens if that freight on those consoles was paid for by the seller? Does that impact my books at all? How would it impact my books? Okay, great, good point. If he pays for it, I probably then didn't end up paying 80 bucks a piece, did I? He just would wrap that in. But nothing happens on my books. Okay, now stick with me. One more step here. Now, I'm just an importer in Long Beach. I bring in 30,000 of these things, and then I'm going to sell them to the Best Buy warehouse. I'm going to sell them to Best Buy, and I'm going to ship them to 10 warehouses across the United States. So now there's a whole nother transaction going on. I call the Best Buys. I'm like, I've got these consoles. Do you want them in time for Christmas? And they're like, absolutely. And we negotiate FOB destination. Now process that for a second. So I'm the gal in Long Beach. I own the import-export business. I just negotiated with Best Buy to ship consoles to them for Christmas. And it's FOB destination. I'm paying for it. But now I'm doing what? Am I buying inventory or selling inventory? Selling inventory. What do I do with that? I just wrote a check for 25 grand to the freight company. I am going to jack the price of my inventory up. Probably I've already incorporated that. But when I write that check, what do I debit when I credit cash? you debit freight expense. It's just an operating expense. So please process what there's a lot of information on the slide. Your first question when you're looking at freight is, am I the buyer or the seller? If I'm buying the inventory, that's very different from I'm selling it. Question A. Question B, is it FOB shipping point or FOB destination? If it's free on board shipping point, the person buying it pays for it. And the ownership transfers the minute that inventory hits the warehouse dock in inland China. So I have to insure it, right, while it's in transit. I've got to take care of it. I've got to pay the freight, and that all goes right into inventory, into my asset account. If now I've got the inventory, I'm selling it to Best Buy's free on board destination, all of a sudden now I got to pay for it. Freight expense, delivery expense, I don't care what you call it. It goes on your P&L. It's just an operating expense. Okay. This is an illustration. This is very, very important. I'm trying to just emphasize now things. Hopefully you're going to go back and reread the chapter and be able to follow the transactions through a little bit more thoroughly before you take the reading quiz. Here's the 4 things I just put in that T account. Debit the purchase price, credit purchase discounts, credit purchase returns and allowances, and debit freight that I'm responsible for. That all goes into the cost of the inventory. Okay, we've done that. We've done this. We've done this. All right, you know what I think we're going to do? We're going to end up with a, I'm just going to do a transaction. And that's what we're going to do for the last 12 minutes. Okay. So to get out a piece of paper, make a journal. I know the fun never stops. And let's do this. Let's do, give me something fun to sell. Candy canes. Great. Great. I am in the candy cane business. And I buy them. Oh, let's not make it China. I buy them from, no, let's actually think of somewhere in America. They make them. Oh, beautiful. They make them in Alaska. They ship them to me here in Seattle. And I sell them all over the country to toy stores and candy shops, right? So I'm a wholesaler. Okay. Great. Okay, everyone understand what I'm doing? These are just little tiny candy canes. So the first thing that I do, let's see, I probably was making these transactions probably back in like August, right? I purchased 200,000 cases of candy canes. For $450,000. $315 net 45. So start making the journal entries and I'll just keep telling the story. We'll go one at a time here. Okay, so I purchased 200,000 cases of candy canes for 450 grand. Terms 315 and 45. As part of the deal, we negotiate with the company in Alaska, free on-board destination. And there's a $689 freight bill. Tyler, you got your thinking cap on. What are you thinking about the freight bill here? Free on-board destination. So who paid the freight? The folks in Alaska. So does anything happen on my books? Nope. They get here. Yay, I go out to my warehouse stock. Obviously, you check them because it's the kind of thing that if they're broken, they're probably not going to go for a whole ton. And 30 cases upon inspection. Are ruined. I call my vendor in Alaska and he grants me a full allowance on those. What do? Make the journal entry. I go out, I inspect them, I'm like, wow, 30 of those cases are completely trashed. What it means is he's not going to invoice me for them. The boxes are, huh? And in this day and age, you'd have to, like, in the old days, it was really kind of almost honor system. I mean, before we could shoot a picture of something and pop it across the world in a second. How much was each case costing me? Okay, so 450K divided by 200,000 is, I'm sorry, 2.25. That so far is my cost basis in each of these things, right? Well, how much of an allowance do I get? $67.50. Yeah, that's not a very good, I didn't use a very good number, but whatever. Okay. What do I debit and what do I credit? Yeah. Yeah, because remember that big T account we just made? What two things go on the debit side? When you pay freight and your purchase price, what goes on the credit side? Purchase allowances and returns and purchase discounts. Great. So now I owe $449,800 and something. $932.50. That was a funny choice. Okay. So that's cool. We're all even there. I pay the invoice. Pay attention to the date and pay attention to how much I owe him. I pay my invoice. Be clear on how much I owe him before you do the calculations. I know this is fascinating stuff. I could start talking about climate change again. You should take my issues in sustainability class. Yeah, that's really my true love. That's my second master's. This is my bread and butter. That's my passion. It's a really good social science class. Oh, here. Well, it's actually fun. Okay. So first off, let's figure out how much he owes us. $450,000 minus $67.50. Everyone agree he owes us, or I'm sorry, I owe him $449,932.50. You do. Now, where is this number, Trevor? What account is that sitting in right now? It's my inventory, and it's also the amount in my what? Accounts payable, isn't it? So what do you know you have to do? Am I debiting or crediting AP, Trevor? When I pay the invoice? Go ahead. Yep, debit it. How much? Yeah, this number up here, right? Because that's what's in it. Okay, stick with me here. We do have to do that. That's what I write the check for. We are. We're making the journal entry. Yep. So how much am I actually making the credit for then? Yeah, that one. Nothing like making nice round numbers, huh?
Again, I like the idea that, you know, action email that like, hey, can you reimburse us like $70?
Right, on a $500,000 invoice. I know.
Sure.
That's funny. But yeah, that's funny.
But I mean, that's real life.
Sure it is. And you can see now in the old days, and I mean, as in my lifetime, my professional lifetime, we freaking did this all by hand. Okay. Tyler.
So you're not taking account of the sales return, but $7.
Okay, I'm going to show you where that was. Set up a T account. We've got 1 minute left. Help Tyler figure out how the return was incorporated.
Well, no, the account payable is debit and then.
Okay, last calculation. How much, and really think about this, how much cost basis do I have in each case of candy canes? Spoiler alert, think about how many cases I actually have. Yeah, well, close. Figure out the cost basis in each last calculation. I got 30 seconds more of your time. How much cost basis is in each case of candy canes? Well, you're looking at your inventory account. 450 started here, and then I credited 67.50 for returns, and I credited this amount for discount. How much is in my inventory account? Which makes sense, the amount I paid him. How many cases are there?
199,000.
30 of the cases are gone. Okay, here's what you need to do for Tuesday. We've only got 2 more days on this. We're quizzing next Thursday on this chapter.